Welcome, everybody. Welcome to my webinar, broadcasting live from Mexico City. Here is 8 a.m. in the morning local time, 14 hours GMT time. Welcome to my webinar, WoW Trades. WoW stands for week over week trades. Let's begin. Okay, quickly a little bit about me. For the ones that already know, well, it's never a useless task to remind you where I come from because that gives a reality check that I'm not any kind of guru or something like that, that it took me a long time to get where I am now, and that should be considered when you start trading your career or trying to develop a career as a trader, because this is not a reach a quick thing nor a quick thing to get. It's a discipline, it's a lifestyle. My name again is Alberto Alvarado. I'm broadcasting from Mexico City. I have more than 10 years of experience in financial trading. I started trading in 2005, my first live account of $10,000 approximately. I lost it all in less than a month. I decided to take, at that time, seriously then my self-learning and my, self-learning. At that time, we didn't have the same kind of tools, not even very good, high-quality webinars. And the Forex industry was just starting at that time, the retail Forex industry. And so I decided to start learning by myself. In 2007, I started seeing the first results of my strategies, just to see my account evaporate again in 2008. And then I decided to quit or continue. I decided to continue, but after the 2008 crisis, I realized that my edge was not complete, and I decided to add up emotional, intuitional, creative elements to it, and it worked pretty well for me. So what you're going to see here, listen here, is the result of all that experience. Besides that, I use common tools like technical indicators, the basic ones, active, stochastics, RSI, Bollinger Bands, all with the standard parameters. Really not big deal which one you use. It's precisely the same because they are normalized when you switch into different time frames. That switching is what will normalize no matter what parameters you use. I have always sustained that the one that needs to adapt to different conditions, the trader, not the indicator, and we need to learn how to read differently as some indicator when we have a lot of volatility or less volatility. The trader is the one to adapt. Besides that, I use fundamental analysis, ordinary fundamental analysis. I don't have a PhD in economics. I only follow up the traditional economic calendars. I get up to date every day, reading the news, etc. I use at times here in the webinar what is called fundamental dynamic levels. Haven't used those levels lately because the market hasn't been working very well using those levels. So that is why I'm expecting for them to work again and to use them again and share them with you. And well, I believe it's pretty much all about me, and let's continue. For the ones that haven't subscribed to my YouTube channel, I strongly suggest you to do so. In YouTube, you go and look for this IIIBB Trading Room channel, as it is here with this apostrophe S. This will show up my picture. You click subscribe. And well, the news of the week, and maybe for the next few weeks, is going to be the follow-up of the United States election. It turns out to be very interesting, the outcome, after having surprisingly elected Donald Trump, regardless and aside of any kind of personal opinions that we and I could have on him, pro or against him. That is not precisely what it's useful for us as traders. Okay. This session we won't have what I say opportunity windows to trade because the markets are still very hesitant, not as volatile as the latest days. The markets are calming down a little bit. We're going to review why that could be, and well, to give it a context and to start looking for, to know what kind of signals we could start looking for in the very short-term future, like today, tomorrow, this week, to start figuring out if something arises, an interesting opportunity could arise. So I will switch to my live charts to have the visuals on the explanations that I will give. Okay, just checking sound. Do we still have sound? Okay, great. Thanks, Chadish. Well, pretty much what we need to review, and this is firstly, before even getting through the charts, is to analyze what the market, the feeling of the markets, okay? After having surprisingly Donald Trump elected there, where the markets were very, very fearful, that's the word, because that is the way the markets behave after having Donald Trump elected, because the speech he used to get into the presidency was among what some could believe aggressive, racist, fascist, etc. But the thing is that what the markets really cared of is that the innovative approach that Donald Trump wanted to maybe impose to the financial and economic machine in the United States, some forces in the capitalism believed that maybe were not the correct, what we can call them, the correct way to make what he said, America great again. There were a lot of fears that maybe he could get very idealized, very radicalized, and in that desire of making America great again, maybe taking decisions based on some uh, some of the speech he used maybe if he was really racist or whatever, taking decisions based on that and not based on economics, etc. The market started hesitating because they really didn't know. This is the very first time we had this kind of case in the United States, so it was like it's what is called a black swan. We really didn't know who he is. Actually, up to now, we really don't know what is in his mind, what he really is up to. So the market started taking its time. This latest Sunday, he delivered the first interview to 16 Minutes, a very popular TV show in the United States. And surprisingly for some, and not that surprisingly for not for some others, uh, what we uh, what we realized is that suddenly he started moderating a lot of his speech. So that automatically, if if that really didn't give back the markets the confidence, at least the volatility was restrained immediately. Because yes, there was an idea. This guy is a businessman, as some sort of business, a successful businessman, not as successful as other billionaires, but a successful businessman. That's unquestionable. This guy is smart. Even again, the speech that he could have used, maybe it's very questionable, but nobody could doubt that this person, at least rationally, is smart. It's a good businessman. So the markets were like hesitant, really believing all his words because at the back end it was like, okay, if this guy knows exactly how to be a businessman, needs to be pragmatic and realistic. So we really need to start finding the clues to deduce if this guy is really out of his mind or if he was only faking maybe during all the presidential career. Apparently, half of the things that he said he never really meant to make them, and now it's a very much more moderate um, speech, even talking on the NAFTA agreement that he wants to renegotiate during his presidential career. The message that he sent is it was like yes, he wanted to renegotiate it, but he insisted very much on the making believe the electors that he was pretty much only wanting to impose his view, and if Canada and Mexico didn't accept it, he would withdraw the United States from the NAFTA agreement. There was no like a real negotiation word in the presidential speech in Donald Trump. But now that he got elected, he's insisting in reviewing and renegotiating, but in a very different mode, much more moderated. So that is giving back to the investors, to the capitalists, conviction that this guy actually is not going to take this kind of decisions based on nationalisms, based on abstract ideologies, but in pure raw pragmatism. What is good for the market economy, he will fight to remain that. The things that he believes that are not good for the American economy, to remove them. But everything inside a common sense framework. And again, the market started like, okay, giving him a chance to demonstrate, to see what is next. The market suddenly felt that there was no need to continue with the panic. And I will show you the Mexican peso chart that I believe is the most emblematic chart that shows you how unstable at some moments it became to try to anticipate what he really meant and what he was really up to. Okay. Bottom line, and just to close this political thing, we still need to wait. Okay, unless you're a very experienced trader, if you are not, just sit on your hands and wait because the markets are really adjusting. The problem now is that the volatility was so high that we have chances of having even more movements in the same direction as the volatility started after having Donald Trump elected, or to have a complete reversal. So the swings the markets, the prices could make are really, really huge. So there is no way, there is no reason to rush. Unfortunately, these latest months, we have had tons of black swans events. We had Brexit when it was apparently, or at least due to the polling, it was impossible to happen, but it happened. It was, according to some polls, sure that Clinton was going to win, and that didn't happen. And that is giving to the markets a mode to trade that is not rational anymore. It was reacting to emotions. You can have today Donald Trump saying something different, and you will see the market reacting in no matter in I don't know what way. So that is why let's wait a little bit. We started receiving the first signals in Sunday that Donald Trump is not crazy, that he is a very pragmatic businessman and he wants to apply his approach that he has had as billionaire to the United States, and the market is getting gradually calmer. But unless the markets overall don't feel comfortable again trading with this Donald Trump factor, I would strongly suggest that unless you are already very professional, if you are starting or if you are like in that learning curve, just wait. Let's watch. Let's enjoy the show and let's learn. These are the invaluable circumstances where we can learn tons of things. Okay? So we're going to review some potential trading opportunities that maybe the most advanced traders could have profited from since Sunday. Because, well, in Sundays when we have the first signals of moderation of Donald Trump, how the market started moving and retracing, and for the ones that were trying to hunt the slightest signal of information from Donald Trump as elected and not as a presidential candidate, immediately reacted to that. Okay, that is very hard to do overall because of the volatility risks, but there were opportunities. I wouldn't, I didn't even suggest this kind of things in my personal YouTube channel because there is simply no reason to run these risks now. The most likely thing is that maybe we should wait at least one more week, at least, to maybe start then considering, okay, the market is coming back to normal gradually, and maybe try to find a time window that could be like 1 week, 2 weeks, trying to fit the trades. This is one of the things that these kind of events show us and remind us. When you're trading binary options through binary.com, the idea is that you find a time frame that you feel comfortable with, and not forcing the markets to fit that. I mean, in other words, if you find that you feel comfortable with trading, let's say, 1 week time windows binary options, you need to start scanning the markets that fit that. Not trying to push yourself that if you feel comfortable and you start learning how to hunt the 1 week trading window opportunities, trying to then push and start opening binary options of 2 days duration, 1 day, 5 hours. You need to start mastering at the beginning stages of your trading career a rational, common sense time window. I would suggest to start 1 week, 2 weeks. The trades that we've opened during the webinars here were 1 week or 2 weeks long. And then when you start really mastering that, you can then start trying to look to specialize in smaller time frames. And thus, since this volatility is being huge, there are no 1 week, 2 week window opportunities, because tomorrow it could be completely different. The market is not reacting to fundamental, predictable things, but to complete unpredictable, fearful factors. That is why, and this is the ultimate explanation, is not because I don't want to share any insights. No, that's not the idea. It's because the markets are not reliable enough to believe that if you detect let's say, a bullish opportunity in some assets, that the conditions will prevail during 2 weeks. This could actually shift in a second. So there is no reason to push into things, okay? Let's start with the British pound. The latest time I commented on this is the British pound chart. The latest time I commented on the British pound trade, if I'm not wrong, I commented on a potential bullish opportunity that needed to be closed before of course, the American elections, for the one that were able to find a time frame that they felt comfortable with, at least 1 week, to find the entry point that they feel comfortable with, could have that chance the information delivered here could have helped you to generate your own trading ideas, but at the end the direction was correct, was to the upside. I commented, by no means keep any trades open during the American elections. It was even before. The Friday before the American elections, we had the non-farm payroll number. And I said, the webinar before that, just forget about keeping open any trade, because there were a lot of things switching and changing very fast during those days. So, well, since that moment, for the ones that opened a bullish trade, the idea was to close them, whether in profit or not, depending on your entry price, but that was the idea. Okay. The market globally, the pound, after having the Donald Trump moderating, actually the pound managed to stabilize higher. You see, these are the prices. The market made it to the 126. to this price. Do you remember this price? This price is where the huge 600 pips sell-off started suddenly. At that time, a lot of people were saying that that was the ultimate signal that the market will continue melting to the parity. And I commented during the webinar that I didn't agree with that. That actually I believe that that sell-off indicated that it's completely oversold at that moment, and that I would be looking for bullish opportunities. I detected a bullish opportunity I shared during the webinars at the time, but the markets really made it here, even after Trump. Why that happened? Well, first of all, we are now not sure if Brexit will happen at all. We are waiting for the first days of December to receive the Supreme Court decision in the UK, ultimately to maybe rule out and say that the Prime Minister cannot or could not pull Article 50 just because she wants it, that maybe she needs authorization of the Parliament. If that happens, maybe Brexit could be delayed by 2, 3, 4, 5 years. We really have no idea. So that gave a little bit of fuel to the markets. But besides, the Trump factor played here a huge role. Why? The political forces, not only in the UK, but in whole Europe mainland, were trying to use the Donald Trump triumph as a tool to legitimize the views on leaving EU. They are trying to market here the Donald Trump winning the elections as that is the path to go. But it has nothing to do with what is happening in the United States and the reasons why people are voting there and the reasons that the political forces are arguing leaving the EU. Apparently, Donald Trump was faking half of the time. Not even maybe the racist comments are as really as he tried to show to the electorate to win the votes. But there is a different thing in Europe. In Europe, there are really political forces really trying to, for example, rule out immigration. But Donald Trump is a business pragmatic man, and he knows that immigration is necessary. It's helping the United States economy. It gives the United States economy a pseudo dumping production cost. And that is helping the United States. And he knows it. He's a businessman. The problem with the political forces in Europe is that they don't have that experience. And in Europe, it's a very different reason. Actually, the ones that argue that immigration is like a bad thing in Europe, they really believe it. So there's a slight difference that makes a complete difference. But even though the political forces anti-EU are trying to use and market here the Donald Trump triumph for their own use. The pound is half out of the EU already, but maybe the Article 50 will never be triggered depending on what the support court rules. And that the pound is the strongest currency now in Europe. Why? Because the real risks are now elsewhere in the EU. Because now the possibilities of the anti-EU parties throughout all Europe could start winning all over the place. And that could threaten the heart of the EU concept and the EU project. So that is why the pound is holding strong, because maybe Brexit won't happen. We already had that big hit bearish on the pound during the latest 6 months, so 3-4 months. So it's already exhausted the movement to the downside, at least for the moment. But that's something that we haven't seen in the euro. Okay, let's switch to the euro 1 hour chart. This huge spike to the upside that you see here is just after Trump being elected. And just look what happened after. Because of this. apparently the anti-EU parties in Europe are really taking seriously to try to even to have their pictures taken with Donald Trump immediately to fuel and to boost, and they are trying to bet that if they receive validation from the United States that people there voted for an anti-system thing, they can do the same thing here. But actually, Donald Trump is not an anti-establishment guy. He's a complete establishment guy. He's a billionaire. He's not an anti-system. He's very system. He's in the system. He's part of the system. He knows how to use it. But even though they will try to again to marketeer the idea, to adapt it, to tweak it, to lie what it's needed, to try to make the compatibility that voting for Trump is the same way as voting for any anti-EU party, and that's not true. And that is creating in the market, I can tell you, the volatility is in progress to be transferred from the United States to Europe. All the volatility and uncertainty that initially generated having Donald Trump elected. We just had the first interview, and that was good enough to stop the volatility. That is not going to happen to Europe. There won't be any big TV show that could calm down the markets now, because now it's really unpredictable what's going to happen in Europe. We're just having referendums in Italy, if I'm not wrong, just around the corner. I believe that Netherlands is going to have another referendum soon. I believe that Denmark also. There are a lot of anti-immigrant sentiment in Germany, growing up every day. So maybe we could just blink, and in 1 year we could have maybe not the UK, maybe even it could be other country to trigger Article 50 even before than the UK, just because there are real risks in Europe. So that is why the euro is moving down. Besides the fundamentals that are not really delivering the results, the expected results in Europe, it's moving down, while the pound just stabilized and I commented during some webinars, the idea, the pound, for me, is the strongest currency in Europe. And now it's being reflected, that fact is clear. In these uncertainty times, the market is favoring the pound and not the euro. And I don't have in sight any kind of event that could change that. So what I am looking for in the euro dollar is when I find trading window opportunities between 1 week, 2 weeks, or bigger to the downside, to share those insights with you here. I am biased bearishly here, not yet to enter the timing, the window opportunities. The timing window opportunities are not as I want, but the idea is to try to look to short this, and just sharing you that. Just quickly, this is how the dailies look like. We anticipated during the webinars that the price here should continue moving down up to the 1.909. This is exactly what it did, like 1 week, 2 weeks after. Then we had retracement, Trump elected, and bang, to the downside again. Okay, so I've been bearish on euro since Brexit. Technically, it was confirmed here, and I comment that in the webinar. A potential shorting opportunity here. And then this is just a retest, and the market is selling off. But now we have even more reasons to short them, to short euro than before. Again, I need to find more evidence, and in any case I find them, I will share them for you here. Well, we just review the pound. This is important. We have 2 remaining topics to talk on this webinar. First of all, the Mexican peso. I know that the Mexican peso is maybe not interesting for you, and maybe the only interested guy here in the webinar talk about peso, Mexican peso. It's me because I'm Mexican, but that is not the case. Why we should look the after Trump? If you really wanted to see what the markets believe that Trump will do regarding to the trade policies, you need to watch how the peso behaves. If you really wanted to see how the propaganda effect due to the speech he used to get into the presidency, if you really want to measure the real consequences of that worldwide, you needed to watch the euro. And that is why the euro is selling off. So you are watching everything now is reflecting Donald Trump's factor. The euro, the speech he used to get into presidency, that for a lot of people, including me, I believe it's a fascist speech. All the things that he said on trading agreements, the most likely hit currency that will reflect what the world really is believing that Donald Trump is having in his head in this topic is the Mexican peso. And then he pretends to rule out every clean energy project and to boost again the fossil fuel industry, etc., etc. Then you have to watch oil and to see. Before we watched oil, because I was very interested to know if the OPEC was really getting an agreement and how aggressive it was. But now even the OPEC thing, it's irrelevant. What will really end up moving the oil now is that if really Donald Trump is going to boost again the fossil fuel approach, not the OPEC. So those are, and that is why I'm watching this charts intraday up to until I find some trade that I could maybe share here with you. But we're going to check. This is the Mexican peso. This huge movement that it was a devaluation more or less of 10% of the peso at the moment Donald Trump was elected. Because initially the speech of him, if he really meant to accomplish all the nonsense promises, that could have had a catastrophic effect on the Mexican economy. Then the market took a little breath and continued moving up. Okay, but then here was weekend, this latest weekend. When I saw that latest comments on Trump talking about the NAFTA and immigration, Mexican immigrants, etc., I saw and I tried to match his body language with his new speech. And the body language was confirming his speech. So apparently that is when the market started realizing that it is said that in the United States, usually the politicians tend to accomplish 80% of their promises. But in this case, I believe Donald Trump will not even accomplish 40% of them. He lied openly, people believe him blindly, and here are the consequences. And maybe he's not as radical as a lot of people wanted to. The speech he sold to everybody, to the world. So at this moment, I said, okay, what I would expect is that the market moves to the 21 zone. This trade, I open it in traditional Forex margin accounts, demo accounts, because I don't feel comfortable opening any kind of live trades of any sort. Binaries, margin Forex, no. I'm just sitting on my hands waiting to time the markets better. So exactly the market did what I expected. Okay, I said, okay, if the markets are going to read the same way I am reading Donald Trump, what I expect in the Mexican peso is to lose the grip on fear. So I said, okay, I would short in the demo. I shorted at 21 with the stop loss at the highs here. And my initial take profit was at 20. We haven't got to 20, but the market really is taking a breath. It's relaxing. Following the logic that if you really want to know what is Donald Trump real approach on trade, you need to watch this. Why? Because the other thing that he talked is to declare pretty much trade war to China. Because of the same reasons he doesn't like the NAFTA agreement. According now to how the market sorry, I need to close this. To how the market reacted after the news is that the markets are trying to give him another chance because maybe he will have with China a more moderate approach and not just to be that combative, that aggressive. So if you're interested in knowing what's his approach on trade, including China, watch the Mexican peso because the Chinese yuan is completely manipulated. So this is the one you to watch to really feel what this guy is up to according to trade. Okay. I was expecting this to get to 20. It didn't get to 20. So yeah, maybe it could have moved to the upside again, but maybe with not that panic, you know? Maybe it will continue moving up, but with normal way, in a normal manner, in a normal fashion. There is no rush. The market is realizing that, yeah, Donald Trump is still a strategic mind. He is not drunk of ideology. He is a strategic mind still. And that tends to give. The certainty is what the markets look for. No matter what kind of certainty, but any kind of certainty at some moment is good. And in this case, realizing this is good. Okay? The latest, the Brent. This is again, this is the daily chart, okay? From here that we had that initial draft in Turkey that maybe the OPEC was going to finally find a way to agree on a production cut. The market started moving up, but then started losing steam. More or less here we started receiving the first news that maybe Iraq wouldn't agree with that production cost, and the market started selling off. If I'm not wrong, I just read that apparently there are chances that yes, they will have a production cut. But you know what? In my opinion, the market moving down this way is showing that the market is maybe considering that the production cuts wouldn't be that as aggressive as initially thought. And then the production cut will have a second importance. Now the importance is Donald Trump will boost fossil oil usage again. That should have a positive effect on oil, increasing the price. Now the production cut is irrelevant. That is why the market is taking a breath now. And even if we have a production cut in the OPEC, I would expect the markets wait Donald Trump to establish a clear line on production cut. Imagine this. OPEC cuts production, maybe not aggressively. Imagine that. But then really Donald Trump shows that he's very pro fossil fuel. That would immediately put the prices up again to $70, $80 immediately because having the production cut. And that would hurt the American economy. So if the OPEC moves, maybe the opinion of Donald Trump will shift because what the United States needs to accomplish the objectives that Donald Trump has is not having an oil at $100 a barrel. So the markets are waiting for Donald Trump to see how he moves and how he plays this move. Because, okay, you said this, but if you do that and OPEC cuts, that will end up hurting the American economy recovery. So I wouldn't be surprised to see one of the first things that he completely retracts of is his fossil fuel position. I wouldn't be surprised to see Donald Trump saying that he will keep the investments and to continue enhancing the clean energy sources project, not because he really believes in that, but because it's a practical, pragmatic way to have the prices of oil below $50. That is what I think ultimately he wants. So we need to wait and see. And as you see, everything is like in a stalemate. We really cannot move anywhere until we have more information. And besides, if it was not that difficult already, we don't know if the Fed rate hike will happen or not. So that is why waiting is the word of the game now. We need to start seeing which things start happening first and in what way to see and analyze what is next and try to see if that fits our trading window and then enter. I would like to thank everybody for showing up for the webinar. I know that maybe these are very challenging times and it is hard to sit on our hands and wait. But trust me, conditions are only for the very, very, very skillful already traders. Only for them. The challenges are so huge in the volatility that we can get our fingers toasted by hitting at the wrong moment. And we don't want that. I mean, it's almost a year end. We don't need that stress that maybe if we survive this year, maybe break even, to start maybe committing mistakes unnecessarily. If we're going to run a risk, it needs to be with a certain parameters of risks. And everything is above average now. The risks, of course, the rewards are higher. But I don't care about the rewards. I care about the risks. As a good trader, you don't take care about your rewards, but your risks. As it is said, if you take care about the pennies, the pounds are going to get to take care of themselves. And we need to have that conservative approach. In any case, I find any opportunity that I don't think so during this rest of the week, I will share that in my YouTube channel. I don't think that will happen. In any case that happens, you will have my update there. In the meanwhile, enjoy the show. This is a very good show. Overall, because Donald Trump is starting to gradually accept implicitly that he is a liar and that he manipulated his voters and worldwide. And that will have very, very interesting ways that the markets will try to adjust. Wait, learn. You have the very good chances of having demo accounts with binary.com. You could try trading this in a disciplined manner until, I don't know, the markets get calmer at least. If you want to play these events and you're not professionally skilled, play it on demo. Don't worry about any kind of mistakes. But I would suggest that overall keep a ludic approach, learn from this. This is unique. Let's try to learn, read a lot, be updated in the news, keep up with the news, be brave to have your own ideas and to try to defend them with the arguments that the markets are giving you. And that will start helping you develop the skills that you need to develop an edge. Again, thank you everybody for showing up. Thanks a lot, Cherise, for hosting. And remember that next week I will be around, same time, same place, same day. And remember to trade safe, be safe, and bye-bye.